Now, I started work in 1988, and I want to tell the story of two remarkable things which have happened over my working life, which are shaping the lives of all of us. And the first one is, of course, venture capital. And if we go back to 1990, the venture capital industry really didn't exist. There was about $2.5 billion of funds, invested about 49 funds. That was the whole industry. Today, that has grown by 60-fold, an industry of 155 billion, but has obviously given rise to many, many much bigger companies. But what's also surprising is that industry has become mainstream. So back in 1988, there were a few endowments and private individuals who would own venture capital funds. Today, the insurance companies, pension funds, and all the world's major investors are looking at venture capital, and many of them are increasing their allocations. And I want to come back to that and spend some more time unpacking what's driving that change. But more than that, companies are raising more and staying private for longer, which are boosting the returns in the sector. Take a company like Google. Before Google had its IPO, it raised less than $40 million in venture funds. And compare that with Snowflake, which when it IPO'd recently had already raised $1.4 billion. Now today, Google's market cap, as we all know, is $1.7 trillion, and Snowflake is $75 billion. So venture's given rise to some very big businesses. But what's interesting is the returns in venture have been really very exciting. And I want to just take you to that next level of detail and unpack a little bit about what the returns are for the different asset classes. And here I've shown the returns of the US index, the S&P 500, by year of fund creation. So if you launched a fund in 2017, the returns you would have from the S&P. Now, those look fantastic. They look even better, in fact, if you think that non-tech profits since 2012 have only grown by 1% in the S&P, whereas private disruptive technology companies have returned 14-fold. Let me overlay on the returns of the S&P 500 what the venture funds have delivered and what investors have received. That is a truly remarkable outperformance. So we've seen since the financial crisis of 2008, a rapid acceleration of returns. And to my mind, we've encouraged a whole new raft of people who want to be a part of this industry moving in. Today, Cambridge Associates, probably the leading global consultant in this area, recommends endowments, foundations, pension funds, insurance companies, private individuals allocate around 15% of their assets to venture. That's a very big number compared with the 1 or 2% that many people have allocated today. And indeed, the US changed the rules in May of last year to facilitate much larger allocations into venture. These returns are all the more impressive if you think for the next 10 years, the general anticipation is that a 60-40 equity bond benchmark will probably return around 1.5 or 2%. So the 30% plus returns that we're seeing here are a really important contributor to pension fund demand. Now, I've shown on the right, possibly the most important book in the history of venture. And it's David Swenson's book on pioneering portfolio management. And David Swenson, who sat on the Schroders board here, was, of course, at Yale and developed something called the Yale model. And he had, for about 20 years, returns on his venture portfolio of over 90%. He understood that capturing the equity risk premium could be done from beyond public markets and in venture, and obviously was a very, very early investor in Google and Amazon. But the other big trend which is driving the growth of venture is that of digitization. And this next chart will be familiar to many of you. This is the 10 largest market cap companies in the world today. Now, most of them have been founded during my working life, but the other thing that 8 out of 10 of them have in common is that they've been driven by digitization. Now, think just for a moment of what's happening. The airline industry took 50 years to reach 50 million customers. 50 years for 50 million customers. Pokemon Go reached 50 million customers in 19 days. Digitization has changed the accessibility of customers around the world. By 2025, we forecast there will be 100 billion connected devices in the world. So we're seeing several things. We're seeing the rise of digitization, the creation of more companies being formed, companies staying private for longer. And if we look at the top 20 businesses which have exited over the last 2 years, 14 of them were venture-backed. Uber, Snowflake, DoorDash, etc. So digitization is having a very powerful effect. And in fact, look at this list. If I take out the 2 that aren't venture-backed, 8 out of 10 of the companies in the top 10 of the market cap of the world all started as venture businesses. So truly, it has been a transformational 30 years. Now, it's not just technology, of course, and we all know that. But let me just have a look at some of the more traditional industries which we know are being disrupted. And I'll start with probably the most profound of all, and that's space exploration. Now, space exploration, when I was a child, was something that only the very biggest governments could contemplate doing. NASA was one of the biggest governments and did space exploration. Today, they subcontract much of their work to SpaceX, a venture-funded business which has now done 126 launches, has brought down the cost of going to space through reusable rockets, and is now planning a trip to Mars. So government replaced by a venture firm. Take entertainment. When I grew up, you hired a DVD, Netflix came along and disrupted entertainment from Blockbuster. But really now, and anybody with children in the audience will be familiar with how Roblox has transformed entertainment. And today, I suspect there's 32 million people playing on Roblox, on user-generated games and automated recommendations, and a truly engaging experience. Take another industry, hotels. How on earth could you disrupt the bricks and mortar experience of a hotel? Well, of course, it was done by Airbnb. And even last year, the year of COVID, 193 million room nights were booked on Airbnb, an industry that one would have thought couldn't be disruptive, which through a good mobile app and some good data science has changed how we see our accommodation needs. Finance, transport. Just one more example here. To me, Tesla today epitomizes the major struggle which is going on in the world. Its market value, last time I checked, was greater than the sum total of all automotive companies in the rest of the world. And yet it only delivered 500,000 cars last year. 500,000 cars confounded many skeptics, but again, the industry that Henry Ford founded is being disrupted by digitization and venture capital. Take finance. Finance, Bank of America seem to be being disrupted by businesses like E-Trade. But those very disruptors have been disrupted again by a business called Robinhood. Robinhood does commission-free trading, and today it has 3 times more customers than E-Trade. Truly remarkable rate of increase. Now, all those companies that I've listed there from venture have all formed part of our venture portfolio, so they're all very dear to us. But I want to talk about one which is dear to you in Korea, and that is Coupang. Coupang is a remarkable story, 12 billion of net sales. As you know, it's transformed e-commerce in Korea, and when it exited with a 60 billion market cap was a true eye-opener to the rest of the world and brought Korea onto the venture capital scene. And I want to return to that theme in just a moment. But before doing that, I want to talk about the one industry which is really changing all of our lives for the better. That industry is, of course, healthcare. Healthcare is fraught with solving diseases and illnesses that were really considered to be beyond reach. And one such example is a company called Juno Therapeutics. Juno Therapeutics found a cure to many types of leukemia, and there's no surprise that it was sold to Celgene for $9 billion a couple of years ago. Again, portfolio company. But what's surprising is 10 years ago, no one thought there was a cure to this disease. Now, Juno isn't alone. There's 5 other examples there of other companies. Pharmaceut, another portfolio company of ours, but look at the cure rates, up nearly 100%, diseases which are being removed because of venture capital. So, I think the last 30 years has been an incredibly exciting journey for the world, but there's a lot more to go for, and I want to come on and talk about that. But before I do, let's just have a look at the other great success story here, and that is your market, Korea. Now, you will be aware that the Korean market is thriving. I've taken the numbers here from PitchBook, and you can see that the Korean market last year, according to PitchBook, did 187 Series A raises and raised nearly $1 billion of new money. Now, for me, that is a fabulous step in the right direction. But I think what is a great surprise to many in the rest of the world is this chart. This looks at the big ecosystems of the world. Now, let's go back 10 years. 10 years ago, if you were a venture investor, you could stay in the US because 100% of all unicorns were from the US. Today, that number is just 50%. So 50% of unicorns from the US. Korea is now a top 10 ecosystem in the world. And why are ecosystems important? Ecosystems create networks for entrepreneurs to feed off other entrepreneurs. So take when LinkedIn was set up, LinkedIn had an infrastructure team. That team broke out, formed a new company, Confluent. Confluent today has a 10 billion market cap. And you're seeing ecosystems attracting more capital, bringing in more entrepreneurs. And so that virtuous circle keeps going. We've recently invested in a structured venture business called Antler, which does early stage investment, brings together talented individuals. They've already set up 314 new businesses and will be launching in Korea in Q1 2022. But they recognize the opportunity which is in these ecosystems to bring in new talent and accelerate the growth of each ecosystem. So huge congratulations for that. I mean, 2 years ago, Korean wasn't in the top 10, but it is today. And what that's giving rise to is a large group of unicorns, which you will be very familiar with, but also some big exits. And to my mind, this is what the world sees. This is where venture capital breaks the surface and public markets start to see what's going on. So a transformational move. Now, that's the backward-looking stuff. What are the next 30 years? Is it going to be as good? Can it carry on at this pace? I have to say I am more optimistic about what's going to happen in the next 30 years than in the last 30 years. And I want to spend a few moments talking about the drivers behind that and where this is going to go. Now, obviously, the first key issue is interest rates. We know that interest rates are low, and I'll come back and talk about that in a moment. But we also know that we are going to see a lot more innovation for several reasons. The first is cloud computing. Cloud computing is now 10 years old, and we're starting to see the fruits of that set up, not just in cloud businesses, but in what the cloud can empower in businesses around the rest of the world. So that's a huge driver and really a real accelerant to digitization. The second one is more subtle, the second change, that if you look at millennials today in the US, about 50% of them are less well off than their parents were at the same age. And that discontent is driving a rapid change in how they want to approach their lives. And of course, many of them are turning to setting up their own businesses and turning to venture. So you've got two big innovation forces which are starting to combine with low interest rates. Now, what do those millennials care most about? Sustainability. They care about the planet they live on. So we're going to see those three forces combining to really impact sustainability to a much greater extent. And I'm going to talk about that just a little bit more in a moment. But first of all, let's just talk about interest rates. Because interest rates, I think, represent a very big opportunity, but I think also represent a risk. Low interest rates have been one of the driving forces of this industry. It's made the cost of finance cheap and plentiful. In fact, 12 years of quantitative easing have meant that there is money everywhere. In fact, over the last 12 months, the number of dollars in circulation has grown by 20%. That's an awful lot of money looking for a home or a Series A funding. This next chart shows the number of interest rates, the proportion of the world's bond markets which have negative interest rates. It's rising quite steadily since the financial crisis. But if I overlay on it the level of interest rates up to 4%, you can see that nearly all the world's bond markets give a return of less than 4%. In other words, the cost of funding venture is extremely low and has been transformed by the last financial crisis. Now, that in itself is a real positive. I want to add one small word of warning that as the world reflates, as we see trade tensions mount, as we see labor shortages, as we see supply chains struggling, there is a risk we'll see more inflation. And governments will respond by higher interest rates, and the cost of funding venture will rise. And I hear regularly economists talking about the potential for interest rates to go up 2 or 3%. Now, that would be a very important negative factor for our industry, and we need to guard against that through not being over-levered, good cash flows, focusing on sound financing. But fundamentally, I think the wind is at our backs here and is a positive source. So that's interest rates and a small warning of concern. But let me tell you the story of sustainability. Now, sustainability and the commitments that over 100 governments have given to net zero, i.e. to reduce net zero carbon emissions by 2050, is huge. In fact, to meet those obligations, we need to build the largest industry in the history of mankind, and we've got 30 years to do it in. Now, many people regard the story of sustainability as a negative one, and there are many negatives, undoubtedly. And the story runs something like this, that over the last 25 years, productive capacity in the world has doubled. Sounds like a great success. In fact, the stock of natural capital, of nature, in that period has fallen by 40%. So even with our population today, we're burning the earth up at a rate of 1.6 Earths. We can't live on 1.6 Earths because we've only got one. And we all know that the populations around the world are growing and becoming more affluent, and that rate of Earth burn is going up rapidly. So we need new solutions, and we cannot allow the rate of extinctions to run today at 100 or even 1,000 times higher than history. So sustainability is top of millennials' agenda, it's top of my agenda, it's top of many people's agenda in how do we take steps forward? How do we fund this new industry? And of course, the answer lies in much of the innovation which is going on in the venture industry. And this, to my mind, is the most exciting narrative of sustainability because it provides solutions to many of the problems that I've just spoken about. Now, what's the framework for doing that? Well, back in 2014, the United Nations set out something called the Sustainable Development Goals. And these were 17 objectives to make a better world, eliminating poverty, eliminating hunger, better land use, better water use. Number 13 of those is climate, but they're all very plain to see and I think should be emblazoned on the heart of every businessman because we need to understand how our businesses are impacting these because this is where the world's focus is moving to. But let me look at just a few businesses that are starting to figure out how they can impact these sustainable development goals. Now, I'm going to pick some pretty basic industries. Let's start with food. Today, 77% of all the birds alive on the planet are poultry. 94% of mammals are there basically to be eaten. So most of the land's area is taken up, most of the world's water is taken up feeding those animals. So new companies, Upside Foods, which is growing meat from stem cells, Impossible Foods, which are plant-based meats, if you like, are solving the solution to how we have better land use, better water use. And I have to say, I tasted one the other day. They were remarkably good. Technology has solved that problem. Again, venture coming to the rescue. We've talked about Tesla before, but in the transport world, Rivian, another portfolio company of ours, devising electronic trucks. Aurora, producing all the software for those trucks and cars to run in a full stack. Appeal Sciences is one of my favorites, a portfolio company. To my mind, the avocado, which is a staple diet of many of us in the UK, was one of the highest carbon foods you could imagine. It was flown in, it had a very short shelf life. And Appeal Sciences set about creating the technology to significantly increase the shelf life of the avocado, not only making the lives of the Harrison household considerably better, but also significantly improving the carbon footprint of both avocados and now many other foods. And Inigo, which is using microbiomes to further improve crop yields. In carbon capture, we've got businesses like Carbon Engineering, which is taking carbon out of the atmosphere, or Frost Methane, which is taking out methane and collapsing it very quickly, or Solugen, which is taking creating synthetic chemicals to avoid the use of hydrocarbons. And finally, Lilac, which is making lithium batteries, the production of lithium for batteries, far, far more efficient. Just 10 examples of venture businesses which have been set up in the last few years to address that sustainability need. And the fascinating thing is, I could have gone on for another 45 minutes just listing businesses which are transforming sustainability. So the narrative here is far more positive, and the opportunity set for venture businesses to make that transformation, I think is really very interesting. Now, why are these companies different from many of the others? Well, I want to take a perspective from an asset manager's view and from an asset owner's view, and just take a quick walk through the history of the industry and where it's going to. And when I started work, the only thing that mattered in the world was returns. Just give us the returns. And then gradually, as quantitative models grew, people started to talk more about, well, how much risk did you take to deliver those returns? And that is what I called asset management 2.0. Today, there's a whole new question being asked, and it's growing more rapidly than I can possibly emphasize. And that is that people no longer just want to know what returns you're generating, but what's the impact you're having? What's the cost to society? What's the cost to nature? What's the cost if you're selling sugars? What's the cost in terms of the diabetes cause? If you're selling tobacco, what's the cost to the healthcare system of curing people? And that impact is both for some companies a positive and for some companies a negative. But when asset owners look at their portfolios, they are counting impact. And now we were looking to report the positive and negative impact of every company in our portfolio to asset owners. And that will change the valuation basis of many businesses, because that force is growing rapidly, and it's growing because many governments are defining the growth of sustainability as key to their needs. So we've seen it so far through preferences, and I've just put a chart up here of ESG, as we call it, environmental, social and governance issues, as a proportion of European funds. And now you can see there the US showing no activity at all, and Asia very little. And if I look at private markets, you can see a slightly different picture where there is more focus. But I would give a wake-up call. It is really important. Asia here is shown as the lowest, and it is coming to Asia quickly. We see it in all of our conversations that the environmental, social and governance credentials of businesses are going to be defining. But that is what people have done without politics and without regulation. Now, in a multipolar world, many governments are defining the environment as critical to their success. In fact, the Europeans are very explicit about this. And so you've seen the European regulators come out with a huge body of regulation, which says we must have SFDR, which is forcing us to own only sustainable businesses, and MiFID to look at our client preferences. So regulation forcing us into more sustainable ways of running money. And of course, politicians are no different. The EU net zero goal is manifested in the EU Sustainable Finance Action Plan, and is forcing an absolute focus on sustainability and a particularly low carbon environment. And of course, who's there to meet those needs? The venture firms. And many of the industries I've listed here will be familiar to you, but they're the industries where asset managers and asset owners are now looking to invest. So Schroders is a $1 trillion asset manager. We are a top 5 brand in the world. We believe that this shift towards sustainability is defining. It's defining for us as a business, and it's defining for us as an asset manager and how we engage with the companies in which we invest. So we've pledged to decarbonize our portfolios. We've used renewable energy. We will report on the exhaust fumes of all the businesses we invest in to our clients and help on that decarbonized journey. And I think that's a really critical thing. But I can tell you that we're not alone in the asset management industry pushing that, because asset owners are pushing the same way. So what does this mean for Korea? Well, I think Korea is in a really exciting position, because Korea today enjoys a largely manufacturing-based economy, But that manufacturing-based economy needs the support of venture to help it decarbonize, provide future growth. And the combination of venture and a manufacturing base provides a really exciting future to combine those two. So for me, that opportunity for Korea being both a big manufacturing business and the top 10 venture ecosystem is a really powerful step in the right direction. So just let's look back for just one moment. We've had a history of very high returns. We've had a very significant increase in allocations to venture and a very strong track record of success. We've got an era of cheap money and many people motivated to help innovate and be more sustainable for the future. And we've got digitization and cloud computing superpowering that transformation. And at the same time as those positives, we've got a natural capital disaster that people are looking at saying we need to solve it. And it seems to me that those two are combining in a really powerful way to provide possibly one of the biggest opportunities we will ever see in our working lives. And we do need to create the biggest industry in the history of mankind. And I think venture is really well placed to do it. Ladies and gentlemen, thank you. It's a great privilege to be here at NextRise, and I'm very much looking forward to questions. Thank you.
Thank you very much for your presentation. And we now have a question and answer session. So if you have any question, please let us know. 자, 지금부터는 저희 질의응답 시간 가도록 하겠습니다. 혹시 질문이 있으시다면 손을 들어주시고요. 저희에게 알려주시면 감사하겠습니다. 네, 가운데 계시고요. 마이크 전달을 부탁드리겠습니다.
ESG와 벤처 투자를 접목한 인상적인 발표였습니다. 아시다시피 한국은 제조 기반의 경제 구조를 가지고 있어서 ESG 측면에서 조금 할 일이 많아 보이는데요. 유럽의 경우 좀 정부가 주도한 것으로 많이 보이는데 정부가 주도하는 것과 투자자가 주도하는 것, 그 어떤 것이 조금 더 효과적일까요?
I would support investor-led all the time. Investors have the innovation, the speed, the agility to make rapid change. And I think I worry that in Europe, governments will kill the industry before it's ever blossomed. So I would be hugely supportive of venture firms combining with traditional manufacturing firms, and that combination could be incredibly powerful going forward. So I would see private sector being the lead of this.
Thank you very much. One more question? 자, 질문 하나 더 받아보도록 하겠습니다. 혹시 질문이 있으십니까? 네, 앞쪽에 손을 들어주셨는데요.
네, 감사합니다. 저는 슬라이드 15페이지 관련돼서 질문이 있는데요. 거기에 에셋 매니지먼트 컴퍼니에 대한 롤에서 리스크와 리턴 위에 임팩이 이제 더해지게 되는데 리스크와 리턴은 이제 보통적으로 사용하는 모델이 있는데 임팩은 어떻게 측정이 되고 있는지 유럽에서는 어떻게 이렇게 기반이 잡혀 있는지 궁금합니다.
You know, that's a really, really important question because, of course, current accounting standards require companies to produce very, very little indeed. And I think there is very little change that's going to happen over the next few years. We've got the rise of carbon accounting in TCFD coming through, but again, that's going to take a long time before it's globally adopted. So our approach is a different approach, which is to look at what companies are doing through their, if you like, through their exhaust fumes. So you can, there are many different sources of outputs from businesses around the world. And then they're less structured, though it's often unstructured data, noisy data, dirty data. But we've built our own models to try and understand precisely what each company is doing. I'm involved with an initiative at Harvard University called looking at impact adjusted profits. And now this is an open source attempt to take the profits of a company and adjust it for externalities. And the Harvard work is incredibly powerful because what it does is it moves the profits of some businesses by 20, 30, or even 40%. And that data is available to everybody. So those are the sorts of initiatives of open sourcing of unstructured data, which we're going to find more and more reporting to our clients on. And that reporting will take the form of, as a result, say, for example, this portfolio, as a result of being sustainable, has taken 10,000 cars off the road or been the equivalent of planting 1 million trees. So people can understand the values of the portfolio, not just in financial terms, but also in environmental terms. But sadly, it'll be a long time before the accounting profession catch up to those exhaust fumes. And that's, I think, is ironic that in a world of big data, that's the right source of thinking about how we understand businesses, not from what they tell us they're doing, but what from they're actually doing.
Thank you very much. 네, 고맙습니다. 자, 혹시 질문이 한 가지 정도 더 있으시면 마무리해 보도록 하겠습니다. 혹시 질문이 있으실까요? 네, 가운데 마이크 전달을 부탁드리고요.
예, 발표 잘 들었습니다. 그 다름이 아니라 뭔가 소비자도 서스테이너빌리티를 원한다고 생각하시는지 혹시 그런 뭐 자료에 대한 결과를 알고 계시는지 궁금합니다.
I think there are two different sources of data. One is if we look at the desires of asset owners, so the people who will end up buying venture funds, the people who will end up buying public equity funds, we see that around 55% of them say that they want to increase the proportion of sustainability in their portfolios. So from a flow of funds into capitalism, if you like, there is a definite strong move to do more here. If you look at companies, Unilever is a good example. They will give you a lot of data which says that since they became a more sustainable business, they've driven customer demand. I personally think that it is different by age group, by market, and even within subsectors within that. So whilst I could point to certain specific bits of data, I think the reality is that it is changing. And it is changing with wealth proportions. So if you look at the baby boomers in the US, they historically cared very little about the environmental footprint. As millennials rise in the US, they care far more. So you're seeing the growth of sustainable businesses, the growth of veganism, of not eating meat, growing really very rapidly. And the purchasing power between those two groups shifting towards the younger generation. So I think there are changes happening, but I think what is more interesting is the rate of change. And it's the rate of change which is what we have to deal with in venture capital all the time. And I think it's where the puck is going.
Thank you very much. 네, 고맙습니다.